Hey you! Yeah, you! I heard you're starting a business. Well, I guess I should start by saying congratulations, for watching the right video, that is. One of the most important decisions when starting a business is what form of business organization you will file. Well, thank goodness. We're here to walk you through the 4 different types of organizations: sole proprietorship, LLC, C-Corp, and S-Corp. We want you to sit back, relax, and let us tell you about the ways you can run a safe and legal business with pride, starting with a sole proprietorship. So, what is a sole proprietorship? Well, for one, it's the simplest form of a business entity. The owner owns every asset and is personally liable for all obligations. This includes any company debt or legal issue. Since there is no limited liability, I would recommend insuring your business to help mitigate any risk. A sole proprietorship is a pass-through entity for federal income tax purposes. This means the owner is personally taxed rather than the business itself. The best part is, you don't even need to be a U.S. citizen. The next type of business to consider is a limited liability company, otherwise known as an LLC. This form of business is also a pass-through entity for tax purposes. Once again, you don't need to be a U.S. citizen. LLCs are owned by one or more people called members. Each member has limited liability based on the amount of his or her own investment. This provides legal protection for the member's personal assets. Before I take a crack at the 2 different forms of corporations, does anyone actually know what a corporation is? A corporation is a separate legal entity with constitutional rights. Owners are referred to as shareholders and are responsible for electing a board of directors who directly oversee corporate affairs. The shareholders have limited liability up to the amount of their investment. Corporations are required to follow internal and external formalities and obligations, like filing annual reports or paying annual fees. When forming a corporation, it is automatically considered a C-Corp unless otherwise elected as an S-Corp. The main disadvantage of a C-Corp is the double taxation at the corporate and shareholder level. So technically, the income is first taxed at the business entity level and then taxed a second time on the shareholder personal income level. But once again, you do not need to be a U.S. citizen. In order to elect S-Corp status with the IRS, the shareholders are required to be a U.S. citizen. For tax purposes, S-Corps actually benefit from being pass-through entities, therefore making it more attractive for those money-hungry investors. Okay, so what do you say? Do you now feel like your Fortune 500 company is underway? I hope I was able to differentiate these 4 types of business organizations on the digital display. Well, that's enough rhyming for now. Remember, if you ever feel like you forgot what I said, the rewind button is down below. And now, you're ready to start your business.